Microsoft has announced a strategic shift in its operational practices by ceasing the involvement of Chinese engineers in supporting the U.S. Department of Defense's DoD usage of its Azure cloud services. This decision follows a ProPublica report highlighting the potential cybersecurity risks associated with the reliance on China-based engineers for sensitive U.S. defense operations. The move aims to mitigate national security concerns and aligns with Microsoft's commitment to enhancing the security of its services for government clients. Azure, a significant revenue driver for Microsoft, contributing over 25% of its total income, plays a crucial role in the company's portfolio, especially in government contracts. The change in operational strategy underscores the importance of cybersecurity in cloud services, particularly for defense-related contracts. The DoD, having awarded substantial cloud contracts to major tech companies, including Microsoft, is now reviewing its systems to prevent similar vulnerabilities. This development reflects the growing emphasis on safeguarding digital infrastructure against potential geopolitical threats, particularly from nations like China.
The financial spotlight today is on the recent surge in platinum prices, which has crossed the psychologically significant $1,500 mark. This price movement is notably occurring amid a decline in open interest, a rare phenomenon suggesting waning market participation despite rising prices. Historically, such a pattern was last observed in 2008, preceding a significant downturn where platinum prices were halved. The current scenario hints at a potential repeat, with analysts suggesting a possible slide to $600. This price behavior is unfolding as the US dollar index confirms its breakout, indicating a strengthening USD, which typically exerts downward pressure on commodity prices, including precious metals like platinum. This development bears significant implications for related markets. The strengthening USD, coupled with platinum's precarious position, suggests potential declines in other precious metals such as gold and silver, as well as mining stocks. The VanEck Junior Gold Miners ETF, GDXJ, is already showing vulnerability, trading below its rising support line. Historically, a strong USD has been inversely correlated with commodity prices, and with the USD index poised for further gains, the market could see a broader correction in precious metals and related equities. Investors are advised to monitor these trends closely, as the current market dynamics may present opportunities for strategic positioning, especially for those considering hedging against the anticipated declines.
Nvidia's stock experienced a slight decline as the U.S. government permitted the company to resume sales of its H20i chips to China, despite opposition from the House Select Committee on China. This decision, criticized by Committee Chairman John Molinar, is perceived as potentially enhancing China's AI capabilities and global market share. The debate over these sales underscores the complex geopolitical tensions influencing the semiconductor industry, particularly as national security concerns also delay a significant AI chip deal between the U.S. and the United Arab Emirates, UAE. The controversy surrounding Nvidia's H20 chip sales to China is further complicated by ongoing negotiations between the U.S. and China over rare earth materials. Meanwhile, the proposed UAE deal, which involves the Abu Dhabi-based AI firm G42, faces scrutiny due to the firm's past collaborations with Chinese entities. U.S. officials fear that this could inadvertently allow Chinese firms access to advanced technology. The situation highlights the broader uncertainties in the semiconductor sector, driven by differing internal U.S. policy perspectives on export controls and the strategic importance of maintaining leadership in the global AI race.
Faruqi and Faruqi, LLP, a prominent national securities law firm, is investigating Capricor Therapeutics, Inc., following the company's receipt of a complete response letter, CRL, from the U.S. Food and Drug Administration, FDA. This CRL denied Capricor's biologics license application, BLA, for its lead cell therapy candidate, Duramiocel, intended for treating cardiomyopathy associated with Duchenne muscular dystrophy, DMD. The FDA cited a lack of substantial evidence of effectiveness and highlighted deficiencies in the chemistry, manufacturing, and controls section of the application. As a result of this development, Capricor's stock price plummeted from $11.40 to $7.64 per share, reflecting a significant loss in investor confidence. The legal action centers on allegations that Capricor and its executives made false or misleading statements regarding the efficacy and safety data from the Phase 2 HOPE-2 trial of Doramyocel. These claims suggest that the company failed to disclose material adverse facts, potentially violating federal securities laws. Faruqi is encouraging investors who suffered losses exceeding $50,000 between October 9, 2024 and July 10, 2025 to consider participating in the class action lawsuit. The firm is also seeking the appointment of a lead plaintiff who will have the largest financial interest and will oversee the litigation on behalf of the class. This legal scrutiny could have broader implications for Capricor's strategic direction and investor relations moving forward.
Vedanta Limited is considering legal action against Viceroy Research LLC following allegations of financial misgovernance. The accusations, described in a report by Viceroy, claim that Vedanta's corporate structure is misused to funnel subsidiary funds to service parent-level debt. Drawing comparisons to a Ponzi scheme, Vedanta has sought the opinion of former Chief Justice of India, Justice Di Chandrachud, who has dismissed the report as lacking credibility, citing Viceroy's history of market manipulation and questionable researcher credentials. Chandrachud highlighted that no regulatory body or credit rating agency has reported any adverse findings against Vedanta, indicating the allegations are largely based on publicly available information. Justice Chandrachud has advised Vedanta on potential legal responses, including defamation lawsuits under the Bharatiya Nyaya Sanhita, 2023, and complaints to the Securities and Exchange Board of India, SEBI, for suspected market manipulation. This situation arises amid Vedanta's strategic moves, including a proposed demerger and refinancing efforts, raising concerns about the timing of Viceroy's report. Chandrachud emphasized India's robust regulatory environment and Vedanta's compliance with disclosure norms, noting no evidence of wrongdoing. The outcome of this legal battle could influence Vedanta's market perception and investor confidence, particularly as it navigates its demerger plans.
XRP, the cryptocurrency associated with Ripple Labs, has recently experienced a significant price surge, reaching $3.60. The highest level since early 2018. This rally is largely attributed to the launch of a new exchange-traded fund, ETF, dedicated to XRP, which has attracted large institutional investors by offering a more regulated and traditional investment route. The ETF's introduction has driven substantial inflows and increased buying volume, pushing XRP's price upwards. Additionally, Ripple's decision to not appeal its legal case with the U.S. Securities and Exchange Commission, SEC, which centered on whether XRP should be considered a security, has removed a significant layer of uncertainty, bolstering investor confidence. Technical indicators suggest a bullish trend for XRP, with moving averages indicating a strong uptrend and the appearance of a golden cross on the daily chart, typically signaling further potential upside. However, the RSI Relative Strength Index is above 80, indicating overbought conditions that could lead to a short-term pullback. The key resistance zone between $3.60 and $3.66 remains a critical threshold. Breaking above it with strong volume could propel XRP towards targets of $3.80 or even $4. Conversely, failure to break this resistance could see XRP trading sideways or retracing to lower support levels. Despite these immediate hurdles, the broader crypto market strength and XRP's ongoing adoption in cross-border payments position it well for potential long-term growth.
Italy's Agnelli family, through its investment company Offshore, is reportedly in discussions to sell its controlling stake in truck manufacturer Iveco Group, with India's Tata Motors emerging as a potential buyer. The talks, as reported by Reuters, do not include Iveco's defense business, IDV, which is being considered for a separate sale or spin-off by 2025. Offshore holds a 27.1% stake, with 43.1% voting rights in Iveco, a company with a market capitalization of approximately €4.2 billion. The news of the potential sale led to a significant increase in Iveco's stock price, which rose by 8.3% on the Milan Stock Exchange. This potential acquisition comes as Iveco, the smallest of Europe's leading truck manufacturers, has been viewed as a merger and acquisition (M&A) candidate due to its strategic importance and market position. However, its involvement in the defense sector has previously limited the pool of potential buyers due to regulatory considerations, such as Italy's Golden Power rules, that allow the government to impose conditions on deals involving nationally strategic assets. The Italian government previously blocked a bid from Chinese company FAO in 2021. The outcome of these discussions could have significant implications for the European truck market and for Tata Motors' strategic expansion.
Masdar and Iberdrola have announced a significant €5.2 billion co-investment in the East Anglia 3 offshore wind farm in the UK, marking one of the largest offshore wind transactions of the decade. This 1.4 gigawatts project, located off the Suffolk coast, is expected to become one of the world's largest offshore wind farms upon its initial operation in late 2026. The project will generate enough clean energy to power approximately 1.3 million British homes and has secured long-term revenue through a 15-year CPI-linked contract for difference and a power purchase agreement with Amazon. The transaction, which includes a substantial project financing of £3.5 billion from 24 international banks, underscores the growing financial commitment to renewable energy infrastructure. In addition, Masdar and Iberdrola have celebrated the full energization of the Baltic Eagle offshore wind farm in Germany, a 476 megawatts project that will supply renewable energy to around 475,000 households, significantly reducing carbon emissions. As the first completed project under their strategic partnership, Baltic Eagle reinforces the company's leadership in the renewable sector and supports Germany's clean energy goals. This collaboration is part of a broader €15 billion alliance aimed at scaling offshore wind and green hydrogen initiatives across key markets, including the UK, Germany, and the US. These projects not only highlight the strategic momentum in clean energy, but also align with Europe's ambitious climate targets and the global shift towards sustainable energy solutions.
The recent steepening of the yield curve has drawn significant attention in the financial markets, particularly as the yield on the 30-year U.S. Treasury note briefly surpassed 5%, nearing its highest point since May. Concurrently, the 10-year Treasury yield approached 4.5%. A steepening yield curve, where long-term interest rates rise more than short-term rates, often signals investor expectations of stronger economic growth and potential inflationary pressures. However, it also reflects the declining value of existing bonds as yields rise, posing challenges for current bondholders. The market volatility was further fueled by reports suggesting that former President Donald Trump was considering the removal of Federal Reserve Chair Jerome Powell, a move that could undermine the central bank's independence. Although Trump has since denied any immediate plans to dismiss Powell, the mere speculation of such a political intervention contributed to the yield fluctuations. The stability of the Federal Reserve is crucial for maintaining investor confidence in the bond markets, and any perceived threats to its autonomy can lead to increased market uncertainty. As yields retreat from their recent highs, investors remain watchful of both political developments and economic indicators that could influence future interest rate expectations.
In a significant ruling, the Appellate Tribunal under the Prevention of Money Laundering Act, PMLA, has confirmed violations by PricewaterhouseCoopers Private Limited, PwC, under the Foreign Exchange Management Act, FEMA, but has reduced the penalty imposed from 230 crore rupees to 80.5 crore rupees. The case originated from a 2019 Enforcement Directorate (ED) investigation, which accused PwC of illegally channeling foreign direct investment (FDI) into a non-permitted sector by misrepresenting capital inflows as grants. This breach involved foreign remittances from PwC's global network entity, PricewaterhouseCoopers Services BV, without the Reserve Bank of India's RBI approval, contravening specific FEMA sections. The tribunal's decision underscores the gravity of regulatory compliance in handling FDI, particularly in sectors where such investments are restricted without prior clearance. While maintaining PwC's culpability, the tribunal criticized the original penalty as excessive, offering partial relief by reducing the fines. This ruling may influence future regulatory actions and corporate strategies regarding FDI compliance. compliance, emphasizing the need for strict adherence to FEMA provisions. The tribunal's findings also highlight the importance of accurately classifying financial transactions to avoid severe penalties and regulatory scrutiny.